Hello guys, welcome back. Yassine again. This week I want to talk about some of my trades that I've done and then the way I exited them with actually a small loss. First, let's talk about what's happening out there on the indexes. I like the Friday's action right in here, but to be honest with you, like some indexes are really performing a lot better than SMH and QQQ. I think SMH is doing a lot better than QQQ. SMH, like if to really get out of the woods, I don't think we're still out of the woods yet, even though like we really had a good action last Friday. It's decent volume, but like I'm watching that 240 to 155, give or take, because you can see that the market actually came out right here, and then like almost like we went sideways here, and then we broke down right on this day, and then we came back and we tested that level like twice, like this day and this day. We pulled back another day and we pulled back. Now we came back strong, and you'll notice that we're making like a lower highs, like actually right in here. So that's like not a promising one, but like I said, we're still not at the wood yet. This is like if you're trading like growth stocks. Like for me, I trade whatever it's ready, whatever got good fundamentals, whatever got good risk to reward ratio, whatever got good technical setup, I'll trade it. SMH is doing a lot better than QQQ. QQQ is like you want to watch this level right in here. Same thing. I think the SPY is doing a lot better than QQQ and the Dow Jones as well. These are the ETF for the Dow Jones. Some of the stocks that I had last week was actually VNT. I think I bought the stock like right back in here. The stocks looks pretty decent on the fundamentals and the technicals since we had that rotation. I think I got into the stock here, and the reason why I'm explaining why I took this stock is like I just want to give you guys an example of what I do sometimes, like how to manage your risk. So I like the stock overall. I looked at it on the monthly. We had a decent resistance, I mean here, and then we broke it. Excuse me. We broke it here, like not a break-in. This is not the optimal break I want to see, but I saw that we didn't really had any bad reaction. Like we wouldn't go down all the way down here. Excuse me. And then and I kind of got it right in this day. So I saw like, okay, the stock is almost fill its gap almost twice, and then it's still holding up there, so it has some strength to it. And then I was watching the 8, and I did explain this like in my previous videos. I said if I knew this like back then when I started trading, man, I will have like my trading will be a lot better, because you will have no emotions. You will have if you buy the stock right in here, you just watch the price. If it violates one of those moving averages, if it violates one of those moving averages, you check some of the profit. It violates the 8, you take some profit. It violates the 21, it violates the 50, and then so forth and so on. And then you have no emotion attached. You let the stock do its thing, and then you'll be good. One thing I always tweak things along the way. So for example, instead of like me getting here and going all the way and then not taking any profit or let the stock comes back all the way. Let's say my stop loss was right in here, for example. Like I would let the stock comes back and hit my 7% or 8% loss or 6%, whatever it is. So I decided to be more aggressive, especially when the market like is really still in that correction mode, volatility mode. So like you want to be aggressive. You want to wait until things like back in November when market had a good moves, and then back again after the follow-up day after April 6th, with most indexes have follow 3 day, and then everything started going up. But since this day is right in here, like this day, since we had a breakout on this stock, like the whole stock, most indexes and most of the stocks were getting hit, except this one. Some of them in the chemical sector. So I decided to get in here. And then as soon as I saw that the stock actually starting to break right in this day, so I decided, I'm like, okay, I have to be more aggressive. Especially what I mean by aggressive is like if I'm up like 20% or 30% on a stock, I'll sell some and then I will sell. Like, let's say I will divide my position to 3 or 4, whatever you like. And then if I'm up like 20% or 25%, I might take some off, and I'll take another. If it breaks and close below the 8 or the 21 or the 50, like I will take one portion out. But since we closed here, and it's close to my entry price, which is like right here. I don't remember which this day or this day. So I was like more aggressive, and then I would cut like 50% of my position, or even like 75%. And I'll watch what it does. And by the time like it was up here, I was already out. So I cut like almost on my position right on this day, because like I said, it was close to my entry price. So I don't want to have I don't want it to roll back, because I was in the green. Since the stocks keeps going up here, I was in the green. I was like, I don't know how much I was up, but since it started rolling, I said no. Stocks should not act this way. So not all of them, they're gonna respect the 8, like Tesla back then. Let me show you what happened in Tesla. Like for example, like you had a breakout here and a breakout here too. So you will watch, if you watch like a bunch of stocks, like I like watching, I like studying charts and then see their behaviors. Like most of them, like if you got a good winner, it will not violate that 8. Like what I mean by that, it will not close below the 8. So once you start closing below the 8, you can do 8, you can do 10. But these are, I found that with other people's experience, I found that these lines are like more respected. Everybody's looking at those, especially the 21 and the 50, or the 20 or the 50. Some of them even use 65, and I'm still using 65, both of them, 65 and 50. So once usually the stock will respect the 8, and if it violates it, if it breaks below that, close below the 8, you will take some off. If it does that, so for me, I decided like if it does that, if it started closing a day or two right close to the area where I bought it, like I'll be more aggressive. I'll manage my risk. Instead of exiting that position with 8% loss, I will exit with like 0.5% loss, or 2% or 1%. I'll keep it as low as possible, or even sometimes if it's starting to close like whatever, like one, or like if I'm let's say if I'm up like 7% or 8% or 10%, I will take like, and it closes below the 8 a day or two. That's a red flag for me. That means the stock wants to roll back or go sideways, because usually stocks will after a breakout, sometimes they will move 5 to 10% and then pull back just a little bit, and then continue to move, and then they will go up 20%, 25%, and then they will build another base, and then they will keep going up. But sometimes I noticed, and it did save me a lot so many times, when it started to close below the 8 after a good breakout. So you need to have a good breakout. It doesn't mean like you need to pull. I'm not saying that stock will pull back here and then it's starting to close below the 8. If it has a good pullback, it will close below the 21. If a stock runs up 20%, 30%, 40%, it's starting to close in day 2 or 3 below the 21, that means the stock, it's telling me that it wants to relax a little bit, it wants to take a breather. But I'm saying if you had a good form of good solid base, 3 months, 2 months, 1 year, and the stock starting to, if it breaks out in a good volume, I'm talking like hypothetically in a perfect world, like it doesn't, there's no such thing as a perfect world, but I'm saying if it starts to break after a breakout, if it starts to close below the 8, for me that's like a flag. Like the stock shouldn't be doing that. Like it should stay almost above the 8. It might penetrate it, it might close one day, and I do sometimes, I watch, not sometimes, but I do watch, like if it closed below the 8, I'll watch the way it closed below the 8. Is like, is it decisively, is like we have a big red candle with volume, so I'll watch the action of the day, what happened. I'm not gonna go in details, like I'm going like, okay, I'm gonna have to look at it intraday and watch how we do it, like watch by minute or 15 minutes. I'll just watch like an hourly or probably the whole day. I'll watch the whole day candle and see how it did close below the 8. So it closed 1 day, 2 day, like I'll start cutting my position, and if I have that 10%, I'll take some off and then watch for the stock. If it comes, even like if it's starting to close and push a little bit more lower and starting to close like touch here like below the 21 or something like that, I'll break the rest of it even or a small loss. I had another position back a couple days ago. I had in RVLV. This one had really good fundamentals, and I was watching it right in this area, right in here. and then stock just gapped up, and I wait for it to pull back, and I got in, I think right in this between these 2 days when it pulled back, and it closed right above the 8 channel, and then I was on the green, everything was fine. This yellow line actually my mouse is dying on me. Let me do something. Sorry about that. So what happened is, sorry about that, guys. So when I got into the stock right here, and this yellow line, actually, if you look at it on a monthly, it was this candle right here. It was the high of that candle, so it was a breakout. I was watching it. It had a really nice breakout, and then with good volume, I'm like, okay, stock's really not following the market is doing. So that could be that stock could be a great leader. So I didn't do anything. I was just watching the 8 the whole time. So that's usually what I do. I watch the whole 8. And I'm telling you guys because I tried so many things, and sometimes like I'll be like, my emotions will be pounding, my heart will be pounding, like, okay, what should I do, what shouldn't do? And then I think that's really a bad idea. Like, you had a breakout, you need to have a plan. I know you put your stop loss, but I had problems following the stock as far as like if it comes back, if it reaches that resistance and bounce right back. So I didn't know like exactly how to manage that risk if it comes down or comes back, and you always have that battle between you and yourself and how to manage the stock. So when I put in, like I said, I mentioned that so many times on my video, I said put these lines, and then if it's starting to close below one of these lines, you should be taking some profit. So when it did that, and I wasn't, to be honest with you, I wasn't expecting the stock to close below the 8. And when it did that here, I said, okay, right below that low, if it starts if it takes that low, I'm gonna have to take, because it's close to my entry level. I'm not up like 20% or 60% or so. If it was, I would have given it some more wiggle room. But so I came out with the rule, like if it's starting to close below the 8, and then I just bought it like as soon as a breakout or pullback, whatever. But usually I want a base, like I want a base. Decent base like that, for example. I mean, this is not a decent base, but it was decent. Like you can see the VCP pattern right in here. Like here, for example, it did a breakout. This is awesome right here. A breakout, you bought it, it never closed below the 8. It never looked back. You could probably take some off here, but and just some off here right here when it's starting to close. But I have like more here. You have more wiggle room to play with. You can let the stock comes down, and you can wait for the stock to close at the end of the day because you had such a cushion. But here, when I got in, I didn't have so much cushioning. So once the stock, so I come out with the rule, like, okay, if it's a stock starting to close below the 8, like, and then watch the way how it's starting to behave. Like, look, and this will come with the experience, like how the price action, like how it's coming. Like here, it was the whole action was like, hypothetically, if it's a good stock and he wants to push higher, I want the price action to be above 50%, like at the upper half of this green candle up here. And if you watch with me, if you notice, like the price action was like sideways here for a while, so it's digesting this recent gains. But since and we touched right above, we touched the 8. But look at here, even though it didn't close below the 8 here, like it's giving me like a hint, like, hey, the price action is starting to get on a lower half of this green candle, and then by next day after that, it did actually confirm what I didn't want the stock to act. So by the time it did that, so I was like, okay, I'm gonna be more aggressive this time, and I'm not gonna let the stock do U-turn on me. That happened to me so many times. I made all kind of mistakes that you guys can think of, and I'm still making mistakes, but I'm just making these videos just to share, like I'm talking to myself. Like years ago, I wish somebody would have tell me or help me or give me a hint, and then because down the road you're gonna have to come up with your own style, and then you just with the right information, and then with doing so much homework, you're gonna have to tweak things and then come up with your own risk to reward ratio, what were you comfortable with. But for me, I came out to the conclusion, like to get the emotions out of the way, I'll let the stock decide for me based on these moving averages. I can literally totally, like, you can be like, okay, if the stock had a good breakout and if it runs like 10%, you take some off. It runs another 20%, you take some off, and then you let the last portion of your stock to go up until it closes below the 250. There is like many ways how to look at it. But like I said, like, this is what I come out to, like, when I'm just bought the stock and the stock's starting to roll over, and instead of me letting the stock comes back and hitting that my loss, basically I'm raising my stop loss, and by doing that is like you managing your risk. So I sold like not most of it, like I think more than 50% of it right here, because I think my price was like 44 something, like right in here. And then by the time it closed right below the here, I was like, oh, totally out. So instead of having that battle, like, okay, what should I do? Will the stock like go up, or look at the stock is pulling back on a low volume. The stock had a really great volume, this could be a bounce. I'm not predicting anything, and that's the worst thing you want to do. You don't want to predict anything. A stock goes up on a big volume. It can go up, and it can break out on a low volume, and it can still run 100%. You want it to break out on a good volume, that's what I'm always looking for, and it can still come down in low volume, and it can still go down real bad, and it will never look up. So this is one example that I just did, and it was another one actually, this one too. I like this one. I don't remember exactly, to be honest with you, what time I got in. I think I got in right in here, right when it break out. So it kind of broke out here, and then it consolidated, touched the 8, and it bounced right there. And I look at the volume down here. So it gave me the convictions for the stock. So when I went for it, stock, I didn't do anything. Stock starting to close below the 8 here, took some off, and then stock again. I was watching the price action. Is it gonna go up here, or is it gonna go below? So the stock hit the 8 but never closed below it, but here here's another flag. So it kind of closed below the 8 here, and then it closed again below here. So I took some off, took some more off. So I'm taking more off, even though like I got in right in here. So but my risk, instead of getting hit waiting for my stop to get hit here, I was already taking some shares off the table here, and by the time it closed below the 8, below the 20, I was already out. Stock looks still good. It looks like it's making a base over base. So so you have a base here, and then it's making another base here. Stock's still doing good. They had earnings it's gonna have earnings on the 12th of May. You want to watch for a breakout, maybe for this level right in here. Another one actually that I had, this one, yeah, same thing, like nice breakout after this move here. Nice breakout right in here. I think I got in right in here. Same thing, because you really don't know what's going to happen. Stock can really keep going up. So all you want to do is just react to what the stock is telling you to do, and watch that price action. Stock went up, it was pretty good, and it's starting to close below here. That's one thing that you don't want the stock to do. It can take, I mean, like I said, it can close below the 8, and it can reverse right back up here. So for me here, I was watching this low here. So it made the low right here. See that? It made a low, and as soon as it did break out, I did break down below that low, I was like, that was like a flag. And so it closed the 8, and it closed below the 21. And here's one thing, like along the way, I mean, you should develop like other ways how to sell. You're not gonna depend only on the moving averages. Like sometimes you want to sell at the strength, not necessarily I'm gonna wait for the stock. Like let's say, for example, like the stock is up like 50%. I'm not gonna wait for the stock to come back down and close below the 21, and then since like instead of making and taking some share off the table at 50% profit, I'm not gonna let the stock comes back down and then and close below the 21, and from 50 I will go to 20. I'm not gonna let that happen. So like I said, you can develop so many ways. I'm just giving you hints from here and here, and then you should collect them, and along with whatever you homework you do, you should develop your own. So sometimes you watch you have to develop many selling rules, not only like the moving average. It should be only one of them. You want to watch the price action. You want to watch for reversals. If the stock had an exhaustion, you're gonna have some rules sometimes when the stock gaps up. So when the stock gaps up, you should take some off, like so this is, I'm just showing you here, like I'm trying to give you put some light in the shed so you can have some ideas and see what's happening out there. You don't want to be just like deer in the headlight, like a deer in the headlight, and looking at like, okay, I brought a stock was fine, nothing wrong with it, and all of a sudden it made a U-turn on you, and then you be like, okay. So you can always get back to the stock. Like for me here, like I said, it closed below the 21 hour. The stock shouldn't be doing that. That's not the behavior it should be doing. It should hold its 8. At least it should do majority of the stock, like a bunch of stock. I go through charts like hundreds of stocks. I go and I screen for every single day, and that's one of the problems that I did before. I wasn't screening every day. I was screening like 3 times a week, but I shouldn't. Now I've been doing it for like the last couple of weeks, like over 2 months. I'll be screening every single day, and you will notice that the majority of the stock will hold that 21, like they do respect the 21. You're starting to violate and close below the 21, man, that's a big flag. Let's say you don't have the 8, you just have the 20 or the 21. That's a big flag, man. Let's say you don't have the 8 and it starts to close, you just bought it here and it comes back to your price, you should break even or get it with a 1% loss instead of a whole 6% or 7% loss. If it comes back like here, for me it was a reversal, good reversal. Like I might get in here, put a stop loss right below it. If you're afraid, if you're waiting for it to come and close, make some new highs, you can get in with half position here. Let's say this candle was like the move here was like 7% or 8%. You'd be like, okay, man, I don't want to risk all 8%. You get in with half or quarter, and then you build your position. You can and you put your stop loss right below. That's how I would do it, or wait for another stock. Another one that I had was actually, and I'm still holding this one. This one did act a lot better than the previous ones. So I got into the stock, I think right in here. It kind of shook me out right on this day, and then it did fill the gap. I usually don't like getting into the stocks when it jumped and made a gap. Usually I wouldn't be trading. I will watch for like stocks to come back like exactly it did here. It filled the gap and it bounced back up. So it did like almost like A to B, B to C, C to D, and then you put your stop loss right below here. Stock had a good run. Look how respected that 8 moving average, exponential moving average, and then right on this day it's starting to give me that red flag right here. Well, sometimes you can do like a stock goes up, pull back a little bit. Let's say you don't like moving averages, which is like you want to be raw. and I do that. Like I have like mini selling rules. You can put your stop loss right below there. You know what I'm saying? Or you can hit 10%, 20%, like I said, and take some profit off. There's nothing wrong with that. Nobody can argue with you like this. You should be doing it this way. No, you shouldn't be doing that. Whatever you like. You know, it works for you. You make money. That's fine. Good. Keep going. Keep tweaking it. You know, that's all what trading is all about. So, like I said, I got in here. I put stop loss right there. So I got shaken out. I got up with small loss, and your loss should be really small, man. That's the key. You want to keep those losses small, and it did violate, close below the 8. I took some off. I don't know how much we're up here. And then I took some off already here. And then this candle was like decent. I'm like, okay, probably stocks could go back up. Sometimes you will have the right setup, man. Everything looks good. You have a breakout here, volume, man, and everything will crash at you like bam. And then I wasn't expecting this move here, especially when the stock they open low here, like here they open not low, open 162 and it closed at 164. That's a good bullish candle, even though it did close below the 8. And then next thing you know, like I was wrong, and then boom, and it closed below the 21. So I'd sold like half of it, and then I'm still holding like half of the other position. And so far it looks good. Those are the trade I've done, and I did actually. I was watching the SMH, and to be honest with you, like I was watching it the last almost hour. Let's put this on an hourly base, and man, on maybe 15-minute or 30-minute. I was watching it right in here. I said, if we're gonna have like the next week, it will look really bad if we keep rolling over right in here. I'm talking about like this area right in here. I was watching it right in here. I said, this is a cat bed. I said, if we keep rolling down here and we close below in this area, man, it will next week. It will be like, for me, it will be negative. And next thing you know, man, they can this is like one of the best ways. Like sometimes if you have a plan, man, just leave it, let the stock do its thing. You never know what could happen. That's why usually I do buy stocks right at the end of the day. I don't like buying them in the middle of the day, because anything can happen, anything can roll over. For me, I'd rather pay a little bit more extra for that confirmation. So that's why I buy them at the end of the day, or buy them next day when they open. And I saw this, and then I was like, man, and I was off the screen, and then next thing you know, man, I looked at it up here, and I'm like, wow, look how they flip things like quickly. So the sentiment was like not out the woods yet, but like I said, you can watch that level right there, right in here. But overall, the volume was pretty decent on SMH. QQQ was a little bit lagging, and some stock is acting a lot better. One of them is like SMG. I did some screening, and to be honest with you, I couldn't find anything. I did only found this one. This is not a buy or sell. I'm just telling you what works for me and what's good. So it looks like almost like an inverse head and shoulder. If you train your eye a little bit, like you can see it right in here. Stock went down, and then went sideways a little bit, and then it kind of broke here, reversed right back up, and then it's going sideways again. Man, when you train your eye, when you spend a lot of times on watching stocks, man, these things will come like naturally to you. For me, it looks actionable right here with the tight stops right below here. Or like if you want to be suka, like you want to wait for things to be a lot better, you can put stop loss right there. But for me, this one looks pretty good. Is another one that I found is SWKS. I like this one a lot better than the other one. You will ask me why, and I'll spend another hour talking about it. But again, like I hope these videos are really helpful for you. Like if you can take anything from it, you can take them. Just do the right thing and lose as small as you can. So why would I like this one compared to the other one? Well, you always, why hypothetically in a perfect world, like you want to buy. Usually you buy at the breakout, or sometimes when you get the experience, you will start buying the right hand side of the stock when it's making that. And so you can buy the breakout, you can buy a little bit before, and this actually takes some practice and experience before you sometimes you'll miss them, sometimes you won't, but you need a lot of practice. So the reason why I would like this one over the other one, we had a base here, and then the stock just actually had a run, and it just going basically sideways here. So that's the first one, right? So I want the stock, I don't want to buy on our third pullback. So you watch here, you have a base, and then you have stock broke out, retest, and then almost respected the 21, but it didn't. Every time it closed below it, it can run. But my point is, like, the stock's still in, and it's like this is like first pullback, or it's almost like it's making a base. It's consolidating, which is not good here. SMG, you look at this, the stock had a really great run, and you watch here, like we had so many bases. This is the day through right on the 6th up here. So stock made a base here. So if the stock was like this one compared to SWKS, like we're talking like SWKS will be almost like here. So it like SWKS, it broke out and then it's going sideways. This one already broke out of that initial base, right? And then it pulled back, and then it went up, and then it went all the way up, and then it broke down, and then it's making another like a inverse head and shoulder. So SWKS, see what I'm saying? It has the base, and it just run and just consolidated again. So I personally, I would like to buy when they just come out of that base. The longer the better, or that first pullback, or maybe sometimes I'll do that second pullback. So you see my point. So I would like to get them when they just come out of that base. That's why I try to screen every day. And then fundamentally, I think sometimes they look pretty good. And sometimes what I would do, like I will just put in SWKS and I compare them to SMG, for example, and you will see, like for example, I would be like, okay, this is where they had that correction, like the bad correction, right, back in 2020, and then you will see which one did actually correct worse than who. You see what I'm saying? And you will see that SMG is acting a lot better than not a lot better, but actually, because if I get a little bit closer, it depends on the time frame where you look at it, you know. So here from what is this, from June all the way here, I mean, they act almost the same. So you know what I'm saying? So they almost act the same. When you go back here, like you look, if you all this time frame, you'll see that SMG acts a lot better. So these like one of the things that I look at. But usually personally, I like to get into the stock when it just broke out, because when it just break out, think about it. I mean, it's still, if it's a good stock, it still had to do that first pullback, second pullback, or it's make a base over base. So it still had like, it's like you just catch the train when it just took off, not like you're not buying at the fourth pullback or something like that. So I hope I didn't talk too much. I hope you guys find it helpful. Thank you so much for watching, and I'll see you next time. Take care. Bye bye.
Yeah, yeah.